Affordable Care Act insurance premiums may very well skyrocket in 2025. And if you're not prepared, well, you might be shelling out thousands of dollars more than you expected. Now, one report shows that some state regulators are already greenlighting double digit increases. We're talking 17%, 21%, even as high as 34% hikes in certain regions. Now, this isn't speculation, it's happening as we speak. And here's the kicker: these hikes are hitting low and middle income Americans the very hardest. And that's the exact people that the ACA was supposed to protect. So the big question is, why now? Who's really behind these hikes? And how can you protect yourself before it's too late? So let's dive into the shocking truth behind this proposed increase and why your wallet might very well be the next casualty of the system. But first, welcome to the Financial Freedom Network, the channel that, as always, exposes the truth behind your money, your credit, and your future. So if you care about keeping more of your hard-earned cash, boosting your credit score, or staying ahead of the financial curve, just smash that like button and subscribe right now. All right, so let's start peeling back the layers here. So the average ACA premium in 2024 already hovered around $438 a month for a silver plan. But now, insurers are filing requests with state departments asking for massive hikes in 2025. And they're citing rising medical costs, hospital fees, prescription drug prices, and post-COVID care spikes. Now, here's what most news outlets won't tell you. These increases aren't just from inflation. They're driven by a perfect storm of consolidation in the healthcare industry, increased hospital billing abuse, delayed care for the pandemic now flooding the system, and insurance companies seizing the moment while public attention is elsewhere. And that's probably the most important of all. Now, some states like Oregon and New York, well, they're already seeing 20 to 30% proposed increases. In Connecticut, one insurer is actually requesting a $6,400 increase per year for some family plans. Now, this isn't just painful, it's unsustainable. But let's be blunt. If you're earning under $55,000 a year and you rely on ACA subsidies, well, you might think that you're protected, but as always, there's a trap. See, many of these enhanced subsidies from the American Rescue Plan, well, they're set to expire. Now, that means millions of people will suddenly be paying out of pocket for coverage that's now getting more and more expensive. And if you're a small business owner or even self-employed, well, this is even more devastating. So you're likely paying the full sticker price of a plan that's about to get a hell of a lot uglier. And when premiums rise this much, history shows us that people make dangerous decisions like dropping coverage, switching to risky short-term plans, or even racking up medical debt just to get by. Now, that's why what happens in the next 60 to 90 days, well, that will shape millions of Americans' healthcare futures. There's no doubt about it. So you need to pay very, very close attention to this video. Let's proceed. Okay, so here we go. Buckle up and let's plunge even deeper. Insurance companies are spinning this as unnecessary. Now, they say it's due to increased usage, but if you dig a little deeper, you'll find massive executive bonuses, aggressive stock buybacks, and rising profits for major providers. In fact, according to a report from Healthcare Dive, several of the top ACA insurers saw net profits of over $5 billion each, even while simultaneously requesting double-digit premium hikes. So what on earth is going on? Well, insiders say insurers are using clever legal language in their filings terms like actuarial uncertainty and unanticipated volatility. And they're using those to justify padded margins and protect shareholders at the expense of policyholders. Meanwhile, federal oversight, well, hey, it's barely visible. So, can these hikes be stopped, you may ask? And the answer is technically yes, but it is complicated. Now, each state's insurance commissioner has to approve the rate increases, but here's the problem. Many states rubber stamp these filings, especially when they're buried in legalese and actuarial spreadsheets. However, public comment periods are opening in many states as we speak. That means if you act quickly, you can submit feedback or objections that could slow down or even reduce these hikes. Now, also, excuse me, there's pressure on Congress to extend ACA subsidies. But as you may have guessed, that's a political football and no one's making any promises. Bottom line, well, if you're not paying attention, the system will steamroll you, and millions may wake up in January asking, how on earth did my $400 plan become $700 overnight? Now, here is the wildest part. If these hikes are approved and subsidies vanish, some Americans will pay more for health insurance than they will for their rent. Now, think about that for a minute. So, again, what can you do? Well, check if your state has an open comment period. Look at alternate insurance options early. Push your representatives to extend ACA subsidies and prepare a financial safety plan to brace for increased costs. And here's the real question that I'm going to answer in a future video. Are these premium hikes part of a hidden plan to shift Americans towards a fully privatized healthcare model? Well, the clues, I'm afraid, are jaw-dropping, and you don't want to miss that breakdown. So subscribe now, comment below where your premiums are heading, and share this video with anyone who relies on ACA coverage, because we can't afford to be silent about this for much longer. And in the meantime, have a great day, and I'll see you guys, as always, on the next one.